All right, if you're watching this right now, take a breath and don't scroll away because something important just snapped in the silver market. I'm not talking about a slow bleed or a normal pullback. I'm talking about a level everyone was watching, $120, failing fast, and when it failed, silver didn't politely step lower. It fell through the floor. Billions in paper value vanished in hours, not days. And here's the part most people are missing. The real trigger wasn't silver itself. It was the US dollar roaring back to life at the exact wrong moment. Stay with me, because I'm going to show you what just happened, why it happened this fast, and how you can spot this kind of break before it eats portfolios. If you're watching this now, you're ahead of the crowd that's still trying to figure out what hit them. Now, before I explain what caused this move, let me teach you something that most people never fully understand about markets. Price doesn't fall because everyone suddenly hates an asset. That's not how this works. Price falls when positioning breaks. Think of markets like a crowded theater. Everything feels calm, people are watching the show, everything's normal. But then someone yells fire. The exits don't change. The walls don't move. The building's exactly the same. But suddenly the crowd matters more than the building itself. That's what just happened to silver. Silver's parabolic run to 120 pulled in leverage, momentum traders, options, futures, all stacked on top of each other like dominoes. And leverage always works beautifully until it doesn't. When prices are rising, leverage feels like free money. You're amplifying gains, you feel like a genius. When prices stall, leverage turns into a trapdoor. That's the foundation you need to understand this move. Without that concept, you're just watching numbers go down, and you're missing the mechanics. If this is making sense so far, drop a comment and let me know where you're watching from, because I want to know who's paying attention to these patterns. Now here's what's actually happening under the hood. Let me break down the sequence step by step, because this wasn't random. This wasn't just bad luck. First thing that happened, the US dollar surged hard as yields jumped. That immediately pressures precious metals, especially ones that just went vertical like silver did. When the dollar strengthens, it takes more of every other currency to buy the same amount of metal. That's basic. But the timing matters. This wasn't happening during a calm grind higher in silver. This was happening right after silver had doubled in a matter of weeks. Second thing, silver hesitated right at 120. That level mattered psychologically, sure, but it also mattered technically and mechanically. When you've got a round number like that after a massive run, everyone's watching it. Traders set stops just below it. Algorithms are programmed around it. So when it failed and broke below, stop losses triggered automatically, not emotionally. Not because someone panicked, automatically. The computers don't care how you feel. Then here's where it accelerates. Margin calls hit leveraged futures positions. See, if you're long silver futures with leverage and the price drops fast enough, your broker doesn't send you a polite email asking if you'd like to add more margin. They liquidate your position. They have to. And when those forced sellers hit a market with thinning liquidity, price doesn't glide lower in an orderly fashion. It air pockets. You get these gaps where there's just no buyers at certain levels. Here's what's wild about this, and you need to catch this. The speed of the drop tells you this wasn't physical demand collapsing. Physical silver markets don't move like this. You don't see coin dealers suddenly refusing to buy. You don't see industrial users canceling orders in hours. Paper markets do this. Futures, options, ETFs, contracts that represent silver but aren't silver. And here's the part that should make you nervous if you're holding anything with leverage right now. Once momentum flips in these paper markets, it feeds on itself. Sellers create more sellers. The selling creates margin calls, which creates more selling, which creates more margin calls. Suddenly, what should have been an orderly pullback becomes a forced selling cascade that has nothing to do with the actual value of the metal. Now, let me show you what very few people are talking about. This same structure, this exact mechanical breakdown, it's created some of the most violent moves in market history. And they all follow the same rhythm. You get a parabolic advance fueled by leverage and momentum. Then you get a macro trigger that shifts the environment. Then you get a widely watched technical level that breaks. Then you get the cascade. Every single time, zooming out helps because this playbook isn't new. Let me give you some history. Think about silver in 2011. Silver went from around $18 to almost $50 in less than 5 months. It was being called the trade of the decade. Everyone was piling in. Then what happened? The CME, the exchange, raised margin requirements. That was the trigger. Silver peaked at $49.80, and within 2 weeks, it was back to $35. Within a few months, it was below $30. Same cascade pattern. Leverage unwind feeding on itself. Or go back to oil in 2008. Oil hit $147 a barrel in July. Everyone said it was going to 200. CNBC had special coverage. Then the financial crisis hit, liquidity dried up, and oil fell to $33 within 6 months. That's a 77% drop. Not because we stopped using oil, because the leverage broke and forced selling took over. Even crypto in 2021 gives you the same lesson. Bitcoin hit 69,000 in November. Altcoins were going parabolic. Leverage was at all-time highs across the system. Then the Fed started talking about rate hikes. Liquidity started tightening. And by the next summer, Bitcoin was below 20,000. Every time you get a parabolic advance fueled by leverage, the unwind is never gentle. It always starts with a macro trigger: rates, the dollar, liquidity tightening, regulatory changes. And it always accelerates when a widely watched level breaks. When you look at the pattern across these different markets in different years, you see the exact same rhythm. Euphoria, leverage, stall, break, cascade. Same movie, different actors. The larger story here isn't that silver is suddenly worthless or that the fundamentals changed overnight. The larger story is that markets are testing how much leverage they can sustain in a world where financial conditions may be tightening again. That's the real question. Now let me be skeptical for a moment because I want you to hear independent thinking, not just hype. I know what some of you are thinking. Could this just be manipulation? Could this be the big banks coordinating a paper smash to shake out the little guy and buy cheap? Maybe. Could there be large players who knew exactly where the stops were and triggered them intentionally? Possibly. Could there be forces that don't want silver breaking out because of what it signals about inflation or currency confidence? Sure, you could make that argument. Here's the thing, though. It doesn't actually matter for you as a trader or investor. Let me be honest with you. Markets don't need conspiracies when mechanics do the job. Large players absolutely know where stops sit. They can see the order flow, but that doesn't change the takeaway for you. You can't control who sells or why they sell or whether there's coordination. You can control how much leverage you carry. You can control where you set your stops. You can control how you react when momentum flips. Blaming manipulation might feel good. It gives you someone to be angry at. Understanding mechanics actually helps you survive. Focus on what you can control. That's the only thing that matters. There are probably 3 types of people watching this right now, and I want to speak to each of you directly. First group, you're long silver and you're feeling punched in the gut right now. Maybe you bought near the top. Maybe you've been holding for months and you were finally in profit, and now it's evaporating. I get it. You believed in the trend. The chart looked perfect. The narrative made sense. And the trend just betrayed you in a way that feels personal. Here's what I want you to hear. Your job right now isn't to panic and sell the bottom. It's also not to double down emotionally and buy more just to prove you were right. Your job is to reassess your risk and ask yourself an honest question. Were you trading momentum or were you investing in fundamentals? If you were trading momentum, the trade is broken. Momentum reversed. If you were investing in fundamentals, then you need to decide if the fundamentals changed or if this was just a mechanical flush. Be honest with yourself about which one you were doing. Second group, you're on the sidelines. You watched silver run and you felt like you missed it. You were waiting for a pullback that never came, and now you're watching this crash and part of you feels relieved. Don't get cocky. Don't convince yourself you're smarter than everyone who got caught. Violent moves like this create opportunity, but only if you wait for stability, not falling knives. The bottom isn't when the selling is most intense. The bottom is when the selling exhausts and price starts building a base. If you're thinking about getting in, wait for structure. Wait for silver to prove it can hold a level and bounce. Catching knives gets you cut. Third group. You're an active trader who thrives on volatility. You love this stuff. You're already looking at options plays or future setups or ways to trade the bounce. This is your reminder that the best setups come after the dust settles, not during the stampede. Yes, there'll be bounces. Dead cat bounces happen. But the high probability trades come when you get clarity on direction again, not when everyone's still trying to figure out if the selling is done. Be patient. The opportunity will still be there tomorrow. Here's the universal rule for all of you, regardless of where you stand. Respect liquidity. When markets are thin and volatile, your orders don't get filled where you think they will. Respect leverage. It's not free money, it's borrowed risk. And respect key levels. When a major support breaks, it usually breaks hard before it stabilizes. So here's what I want you to answer in the comments. Are you holding silver right now? And if so, what's your plan? Are you waiting for a specific level to get in, or are you staying away entirely? I'm genuinely curious where your heads are at. Now let me tell you where I stand personally. I'm not panicking, and I'm not blindly buying the dip just because something fell. I'm watching 3 things very closely, and these are the signals that'll tell me what happens next. First, I'm watching the US dollar. Does this resurgence hold, or does it fade? If the dollar keeps pushing higher, that's continued pressure on metals. If it stalls here and starts rolling over, that removes one major headwind. Second, I'm watching yields. 10-year yields, real yields specifically. Do they keep climbing or do they start rolling over? because rising real yields make non-yielding assets like silver and gold less attractive on a relative basis. If yields peak and fall, that's supportive for metals. Third, I'm monitoring silver's behavior after this flush. Does it stabilize and build a base, or do rallies get sold aggressively? That'll tell you whether there's real demand coming in, or if this needs more time to heal. Based on my analysis, this move was mechanical and technical, not fundamental. The fundamentals around metals haven't vanished overnight. Central banks are still buying gold. Industrial demand for silver and solar panels and electronics hasn't disappeared. Government debt levels haven't magically improved. Inflation concerns haven't been solved. What changed was positioning and leverage, not the underlying story. But here's the reality. If history rhymes, this reset was probably necessary before any sustainable next leg higher. Markets don't go straight up forever. Even the best bull markets need to shake out weak hands and excess leverage. This might have been that moment for silver. I'm not a financial advisor. This is not financial advice. I'm sharing my analysis and what I'm watching. But you need to do your own research and make your own decisions based on your own situation and risk tolerance. If you made it this far, you're the kind of person who thinks critically instead of just reacting. That mentality will serve you well, no matter what markets do next. If this breakdown helped you see the mechanics instead of just the price action, do me a favor and share this with someone who needs to understand what just happened. And if you're not subscribed, hit that button. Because this kind of pattern recognition is what keeps you ahead of the moves that catch everyone else off guard. Stay sharp out there. Think critically, verify the data, and make your own decisions. I'll see you in the next one.